Hi guys, and welcome to Nico Does. I'm Nico. Thanks for tuning in. Today I'd like to speak to you guys about Bitcoin futures that are trading on the CFE, the CBOE exchange. So the futures so far have been trading exactly as designed. Despite the echoes of Bitcoin coming down as a result of this, we still have seen Bitcoin reach new highs, currently trading around 19,500 and likely to go higher coming this Sunday and thereon after because of the CME launching their futures contracts on Sunday. One interesting thing that I would like to point out is the spread between the Bitcoin and the Bitcoin futures contract, specifically deliverable January 1st. This is interesting because usually in these situations we call this arbitrage, when you can sell short the higher priced Bitcoin futures contract deliverable January 1st and buy long the underlying Bitcoin asset, therefore essentially delivering that one Bitcoin that's cheaper to the buyer of that contract that you sold for the spread difference as a net gain. Usually these things close within minutes and are a phenomenon traders love because it's a risk-free moral hazard way of profiting the spread between inefficiency in a market. The reasons why I think that this spread has happened was because a lot of brokerages have decided against allowing their customers to short Bitcoin futures on their platforms. Coming first was Interactive Brokers about 4 days ago from today, Saturday. The Interactive Brokers allowed their customers to begin shorting Bitcoin futures. And I believe there was one other pretty well-known, popularly used exchange that now is allowing their customers to also short the futures contract. So we have seen the spread vary from 18% down to 5%, which is still pretty uncommon, but we do expect the spread to diminish over time. And I think that another reason why this spread has been so high is because I believe that investors perceive the implied volatility of the futures contract or of Bitcoin to be higher than the cap from which the futures contract can trade following the prior settlement day. People that aren't familiar with the futures contract, the CBOE has limited the maximum and minimum amount that Bitcoin's futures can trade that day to 20% either way from the prior day's settlement price. So if say it closed at $10,000, they would only allow $12,000 or $8,000 for the high and low for that day. So if an investor believes that it is possible to make a higher return than the 20%, then it would be disadvantageous to go with longing via a futures contract because they wouldn't be seeing the same reward as they would if they just bought the underlying asset as is. One thing that's really good about these futures contracts, besides legitimizing the cryptocurrency, is that it could bring in a lot of institutional and retail investment dollars into the crypto space, which would bode really well for the infrastructure development for the underlying technologies. Overall, these are a very good thing, besides it even taming Bitcoin, which could happen and very likely to happen. So right now we're seeing the entire market cap for Bitcoin at around 300 billion, the whole entire market cap for cryptocurrency at around 500 billion. So we'll see what happens in the future.